Today our attention is on the Central Depository System, the CDS. The CDS, Central Depository System. Now, by the end of this lesson, you should be able to define Central Depository System, should be able to outline the functions of the CDS and the advantages of operating a central depository system in relation to transfer of shares. Now, prior to the year 2004, the Nairobi Securities Exchange used a manual delivery and settlement system, which involved, number one, the exchange of share certificates between stockbrokers, that is one, stockbrokers. Then number two, the Nairobi Security Exchange. And the number three, the relevant shares registrar of listed companies before a trading could be completed and the buyer issued with a share certificate in his or her name. Before the buying and selling of shares was centralized or before it was digitalized, the Nairobi Securities Exchange operated a manual delivery and settlement system which involved the exchange of share certificates, the physical certificates between stockbrokers, because by now you know that the members of the public do not trade directly at the Securities Exchange. No, they have to seek the services of stockbrokers who are the authorized. These are persons who have been given the trading rights at the exchange. So, previously, prior to 2004, there was a physical exchange of certificates. If I was to sell you shares of a company, I was forced to surrender my certificate to a stockbroker. You are also expected to engage a stockbroker, and before the rights were transferred to the buyer, before the share certificates could be in his or her name, there had to be physical exchange. And that also involved the different registrars of the listed companies before a trading transaction could be completed. And after a long history of using paper certificates, which we know faced several challenges, including duplication of shares, which included challenges like signature mismatches. There are also transfer problems. Some shares also, the certificates, because they are papers, some of them deteriorated, they depreciated the papers. So that is a long history of using paper certificates. That using of paper certificates was also a major contributor to raising arbitration cases. There are many cases of investor disputes, and as a result, candidates, the CDSC undertook a digitalization process. And the intention of starting this digitalization process was to introduce what we call book entry, or what we call electronic securities in the market. And that eliminated the efficiencies and the risks associated with the paper-based trading environment. That enhanced the security, enhanced the safety of dealing with shares, and it boosted market confidence, leading to increased trading in shares, and that ensured that Kenya stock market increased in trading. Okay? The stock market upgraded the delivery. It upgraded the clearing and settlement functions in line with the international standards. The digitalization process means the introduction of book entry or the electronic securities in the market. Because the country had had a long history of disputes, of challenges associated with the physical exchange of share certificates. So that is a small background on the CDS, the Central Depository System. The CDS is just a computer system that is operated by the CDSC. CDS is a computer system. The CDS is a computer system operated by the Central Depository System Corporation that facilitates holding of shares in electronic form. That facilitates the holding of shares in electronic form or in electronic accounts that are opened by shareholders, and it manages the process of transferring shares traded at the exchange. Traded at the exchange. So the Central Depository Act lays down the legal and regulatory framework upon which the establishment and operations of the CDSC are anchored. And this corporation operates under the regulatory oversight of the Capital Markets Authority. The CDSC, the Central Depository System Corporation, is a limited liability company that is approved by the Capital Markets Authority. And it is mandated to ensure the effectiveness and the efficiency of the clearing, delivery, and settlement of securities in the Kenya capital markets. Do you understand? It is done what? It is mandated to do what? To ensure the effectiveness and the efficiency of clearing, number one, of delivery, number two, and of settlement of securities in the Kenya capital markets. And in that regard, the corporation, the CDS corporation, in that regard, the CDSC falls under the ambit of the Capital Markets Act and the regulations and rules under the Act. Now, therefore, the CDSC as an integral financial market infrastructure plays a critical role for the efficient functioning of the domestic and regional financial markets. And its day-to-day operations or management is guided by the CDS rules, the day-to-day operations guided by the CDS rules. And the CDS operational procedures also outline the detailed processes and description, the description on how the different functions are performed. So we will not go into details on the regulations and the rules, the operations procedures. We will not go into the details on how the corporation carries out its mandate on day-to-day basis.